Hi guys, welcome to this section once again. So I'm talking about market trends and support and resistance, how to identify support and resistance. I'll also be talking about the market trends and all of that so you can properly understand. So first of all, I want to talk about the three types of market trends. And there are three types of market trends which are the uptrend, downtrend, and consolidation markets. We also call it the ranging market. Um, yeah, consolidation market, range market, or choppy market. Yes, I just remember, or choppy market. That's what we call the third one. So first of all, I want to show you what we call a downtrend. A downtrend consists of a higher low, a lower low and a lower high, a lower low and lower high, lower low, lower high, lower low, lower high. It just keeps going down, 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 down. So I'm going to draw it out for you. Where is my I'm going to draw it out for you so you can just understand what I'm talking about. So a downtrend starts from a lower high to a lower low, then lower high to a lower low, then lower high to a lower low, then lower high to a lower low. Like it just keeps going down and down and down. So this is what you're actually seeing here. You're actually seeing here from this chart. This is currently a downtrend. So if you want to understand or identify a trend, you have to start from your monthly time frame. From the monthly time frame, it will show you what it needs to show you. What is the overall trend of this market? You can see how it's going. Where we marked currently as a downtrend on the monthly, you can see that it's a downtrend currently on the monthly time frame. But the overall trend, you can't really pick out because you can say this trend right here. You can take, the market wants to go on a bullish run, but the overall trend currently is that the market is currently on a downtrend movement. And here it was kind of ranging and then broke below, then came back up again and continued. So the market is overall trend is still on a bearish movement. It has not indicated that it wants to start going on a full bullish movement. As for the monthly time frame, so this is what you are seeing here on the monthly time frame as well. You can see that on your weekly time frame, the market had moved up to continue its trend on a daily, from the monthly down to the weekly. You can see that it's still going on a downtrend movement, and that was what we marked out here. We're going back to daily, and then daily expands it for us, and you can see what the market is showing us. And we go to 4 hours, you can see that the 4 hours trend also is still the same thing. Let me squeeze in the chart. On 4 hours, you can see what the market is doing. It's still downtrend, but also there are still some ups and lows of ups and lows. A market going up again and coming down and still following or obeying the overall trend. So for you to understand how to identify a trend, you have to start from your higher time frame. I said earlier, I've said before that your market obeys the higher TFs. Anything your monthly is telling you is what weekly is going to obey. Anything the weekly is telling you is what the daily is going to obey. Anything the daily is telling you is definitely what the 4 hours to your 1 hour will be. And like from 4 hours, 1 hour has to obey what 4 hours is saying. The 30 minutes have to obey what 1 hour is saying. And 15 minutes have to obey what the higher TF is instructing you to say. So you have to always sit on your higher time frame to understand your analysis if you're looking for a high probability trade. So then we go back again to daily. So I'm going to be explaining what an uptrend is. So I have to squeeze in my chart and then just move it to the side here. Okay, I was trying to. Okay, no problem. So now just talk about the uptrend. An uptrend is mostly consists of a higher high to a higher low, a higher high to a higher low. So I'm going to show you that what it entails here. Higher high to a higher low, another higher high to a higher low, another higher high to a higher low. So it just keeps on. I don't know what this thing is doing here. Let me just delete. So I said a uptrend gives you a higher high to a higher low, a higher high. I don't know why this thing is misbehaving, so apologies on that. A higher high to a higher low, a higher high to a higher low, like that, like that. I don't know why this thing is not staying in one place, but let me do it again. And it continues the trend like that. It continues the trend like that. It continues like that. A high, higher low, like that, like that. So the market keeps on doing that. That is where when the market is going on an uptrend movement. On an uptrend movement, it just keeps on going high, low, high, low, high, low. So a higher high, higher low, higher high, higher low is what makes up an uptrend. And that is what you are seeing here. This clearly is an uptrend vibes here. You can see that the market kept on going up, down, up, down, up, down. Let's just move from monthly and look for a uptrend movement. Like if you can capture an uptrend movement on monthly, or let me just look for a different pair that talks about, that shows an uptrend movement on a clear path. So we have this here. This is clearly was a downtrend movement, but you can see now that the market currently was have been bullish. It was going on an uptrend for a very long time. This here on a monthly time frame. Market had been bullish for a very long time. Then we move it to weekly to see a proper view. You can see that the market has been very bullish on weekly as well. So we have an uptrend movement on weekly going higher low, higher high, higher low, higher high, higher low, higher high, higher low. The market just kept on going up. Then we move again to our daily. We kept on seeing it going up, like that, like that, like that. We wonder, why is market not going down? Why is market not a downtrend? What's the overall trend is bullish? Why is it? So now the thing about your uptrend and downtrend, there are two things about uptrend and downtrend that you need to be very, very careful. In an uptrend, you do not look for major sales. You don't start looking for sales in an uptrend. You have to obey what the trend is giving you. You only look for buys. Now, your buys are your impulse movement in an uptrend. And in a downtrend, your sales are your impulse movement. Impulse movement is the real movement of the market. When the market is really, really moving, that is the flow of your trend energy. So if you're just on an uptrend, the major move and major flow of energy is going to be buys. As you can see, more buys are going to be occurring and less sales are going to be occurring. More buys, less sales, more buys, less sales in an uptrend. In a downtrend, you're also going to be seeing more sales and less buys, more sales, less buys, more sales, less buys. So as a trader, if you're following the trend, you always have to pay attention to the sell movement. That is what you need in your downtrend. And the buy movement, what you need in an uptrend. Do you understand? I hope you really understand what I'm saying. And that's what you actually need in your uptrend and downtrend. And the retracement in an uptrend is your sales. The retracement in a downtrend is your buys. So in every downtrend, your retracement is always going to be the buys. If you hear market is retracing in a downtrend, it means market wants to go on a buy movement. So you want to trade against the pair, you want to counter trend, you want to trade against the pair, you want to trade the retracement. That's if you feel that retracement to give you a healthy setup in an uptrend. In a downtrend, sorry, for your sell. And the same thing goes for your uptrend as well. Your uptrend, your downtrend, you only look for your sells. And then if you want to trade against the pair, you look for buys. That's your retracement in a downtrend. Now we'll have to look for a choppy market. I want to explain what the choppy market is all about. A choppy market is a phase where the market is currently ranging. So there is no movement occurring in that phase. It's just ranging. And something like this here is what we call something like this here is what we call a choppy market. There is no uptrend, there is no downtrend. It's just going by up, down in one motion, in one row. Up, down in one row. That is what we call a choppy market. So the market keeps on going this way. In just one row. It moves 1, 2, 3, like it continues going up and it doesn't break. it doesn't break. It doesn't break. So there's no break of structure. Like there's no break where market wants to break below or wants to break above. So you have to stay away from such a market because the manipulations are mostly always going to be very high. The market doesn't know what it's doing. You don't know whether you want to buy, you want to sell. Only some experts trade a choppy market. So if you're not an expert, stay away from choppy markets. Also, I also said I was going to talk about support and resistance and how to identify a support region and a resistance level. So when we talk about support and resistance is an area where the sell begins, the sell movement begins, and the buy movement ends. That is your resistance, where a sell movement begins and a buy movement ends. So, and then I remember I told you guys in the last class that the red candles on your chart are your sell candles, and the green candles on your chart are your buy candles. So you don't have to mix them up. So now we're going to look for a resistance area. And remember I said a resistance area is where your sells candle begins and where your buy candle ends. So now this place here is a resistance. You can see this area here is a resistance, right? You're saying it is resistance. Some people might call it supply zone, maybe the supply zone or so, but it's still your resistance level because that is where your sell movement begins and your buy movement ends. Now, a support zone or a support area is where this is resistance here. Now, a support area is where your sell movement ends and your buy movement begins. So where your sell movement ends and your buy movement begins is where you mark as support. So this area here, and I just marked, right? That area is a support level. This area here is support. This area here is resistance, support, resistance, support, resistance. So you keep on hearing me say, oh, if market breaks the support line, we'll do this, we'll do that, we'll do that. This is what we call support, and that is what we call resistance. So that is all you have to know about this section, this area of market trends and support and resistance identification. I hope you understood what I said. If you have any questions on this particular piece, don't forget to drop your comments and on the Telegram group. Ask questions on these videos if you don't understand this particular aspects. We will move to the next phase. With these brief explanations, and I'm going to give you, it will help you when we get to time frames. All these areas here are time frames, but in certain time frames, like identify certain kind of traders. Should I break it down now or wait? I'll wait till next week Wednesday, but I want to be able to spot easy places. So these are support areas. This is support. This is support. This is support. This is support. This is what support. This is what support. And this area can be called support, but then most of the time, these areas are also called demand. Also, so I'm saying it together. I'm saying it at the same time. So when you hear some terminologies like this, you'll be able to have an idea. When they say demand area, you can be able to just pinpoint, okay, this area is a demand. It's like this support area is also a demand area, and then but it's broader than that though. But at least you know what you can have an idea of what other people are saying. That's almost the same thing together. So all these support area I said earlier, areas where your buys start from, your buy opening, like your buy candle start from. This is it. And there are areas where your sell candle closes, your sell candle movement closes, right? So your sell candle movement here close at this place here. Most people will call this place a support area, it is a support area anyways, a support area. And your sell candle ended here again, so it's a support area. Your sell candle ended and your buy candle started from that place. So your sell candle ended here and your buy candle started from that place. Though if you move to the lower time frame, you can see a broader picture of what I'm talking about. Those are 4 hours. If you move to the 15 minutes, you will see clearly what I'm saying. Those areas are marked and everything, you see it clearly. You can see clearly that Where the sell candle ended, a buy movement kicked off. Where the sell candle ended, a buy movement kicked off. So that place is your support area. This is support. And where the buy candle ended and where the sell candle started from is your resistance. I hope you understand it now.
Yeah.
It's clear. It looks very simple.
Yeah.
It looks very simple, right? So I'm just trying to make it
at the surface.
At the surface. And also I'm just trying to make you understand that the market is not as hard as the way people praises it to be. If you come up
at the end.
yeah, no problem. If you come up with that mindset that the market is very hard, you will be panicking, you won't easily see clearly. All of us, when we all started trading, we all panicked at one point or the other. We all had fears because of what we were being told. But at the end of the day, realize that the market kind of disciplines you and makes you understand your person more in the market, and then you now start to believe and trust in your analysis. Your analysis is never really wrong. So most of the time it might be wrong because you did not follow some necessary rules. But if you follow your rules and everything, you would be more confident in yourself than looking at other people's opinions. So now I'm going to be spotting out areas as a retail trader where support turns resistance. Because I'm very sure you've been hearing about S and arrow, and R and S as the support on resistance, resistance on support, and you'd be like, what is it? What does it entail? How does it look like? You don't need to trade it now. Please don't try to trade it because you're not very good. There are so many rules attached to it. And most of the time, it's not every time market obeys that protocol of support and resistance. So until we have our next class, which is the candlestick sections and the time frame areas, then you can now start talking about wanting to try out your strategy. So because they all work with the markets most of the time, your zonal entries or anything works with most of the time what the candlestick is behaving. Some certain kind of candlesticks will give you the go ahead. Some will tell you, we're not ready. Some can be very deceitful. You have to be very, very careful what you are looking for in the market. So a support and resistance area, for instance, is this area here. Let's mark this area here. So this is 4 hours. You can easily see most of this thing on 15 minutes. So you can see, for instance, that market turned that zone, right? This is the support area. Market had broken it and came back to this place here. This is a support turn resistance zone, and then started selling. Now market did the same thing here. It did the same thing here. Most people would have marked this place though on your 15 minutes time frame. Let's get to 15 minutes and see for ourselves what the market did on 15 minutes. Let's see for ourselves what the market did on 15 minutes. Are you seeing for yourself?
Yeah.
Are you seeing it that this support area turned resistance area, say support to resistance area, this zone area turned to resistance area, and still market still came back to this place? But there are some people that will not see what you're seeing because they are more advanced. Okay, someone made a comment. So yeah, I'm currently recording this version. The first version was not recorded, but don't worry. I'll redo that one later, but we'll just make a short video and send to the group later on the first version of the uptrend and downtrend. I'm currently recording this one, so you don't have to worry. Any other questions? Okay, I think that's all. So you can see it for yourself now, right? You can see it a support turn resistance. And now the reason why we are doing a support turn resistance is because of the trend. It is because of the trend. You don't just enter a chart and say, I'm looking for support and resistance. because I now know where to support and resistance. So I'm going to go there and I'm going to just be looking for support and resistance. And you might be wondering, you're not putting your sell markup here. This short, let's short. You'll not be putting your let me put buy. I mean, yeah. You're not looking for support or resistance. You now go and put buy candle, buy this thing here, for instance. Sorry, this is Fibonacci. I don't use Fib. Wait, okay, yeah. You're not gonna put buy candle because I'm looking for resistance tone supports. So because this is a resistance tone support area, I'm sorry, this is a resistance area, for instance, and you can mark it mistakenly mark that place as a resistance tone support area, right? Some people don't really know what they're looking for in the market. That's why I'm putting it there, please. So now you're looking for resistance tone supports. How can you be looking for that in a downtrend when you should be looking for support or resistance in a downtrend? Do you understand? So you enter here and put your SL here. Let's say this is too much. Your SL 20 pips. And you're already saying, oh, it's going to go my way. Because you just mark this resistance here on 15 minutes without looking at your trend line, your trend, what is the market telling you from your higher TFs, your monthly, your weekly, your daily, your 4 hours. What are you really seeing? Do you understand? Then your person will go and be wondering, why is the market going against me? And you hit SL. The market is continuing going down. You go and look for again. I'm looking for, because you're just looking for the opposite of the markets. Do you understand? So this is a downtrend. So anything you're looking for in your downtrend is just simply sells. Plus your chart patterns will help you a lot. So, and then let's go and look for, let me go back to daily. Let me go back to daily, for instance, and mark this place here. Let me mark this place. Yeah. I hope you understand. I'm not confusing you.
Yep, go on.
You understand, right?
Yeah.
You already understand a support area, and what they call is resistance area.
Yeah.
Good. So now this is our daily now. This is an uptrend, right? That trend where we're able to spot a support turn resistance was in a downtrend. Now we are in an uptrend, right? So what we'll be looking for, what we are going to be looking, can you guys hear me? Can you guys hear me? Hello? So in an uptrend, we look for buys and we're looking for possible buy areas to enter. This trend here is a buy trend. I said earlier, a buy trend is a higher low, higher high, higher low, higher high, higher low, higher high, higher low. These are like uptrend, like upwards moving, like a staircase. You're climbing a staircase, for instance, you're going up. You want to go upstairs. Yes, that is an uptrend. And this is here, you can recognize as a downtrend. And you can easily get the overall trend from your monthly, weekly, daily, 4 hours, 1 hour down to your lower time frame, but mostly from your monthly, weekly, daily to 4 hours. You can easily get the trend of the market and the current movement of the market at that point in the market space. And now we're looking for, I also explained support to resistance area in a sell trend, because on a downtrend, we are only looking for sells. And in an uptrend, we are only looking for buys. So now this is an uptrend, and I'm literally looking for possible buy areas as we want to see. So I'll go to my 4 hours, for instance, and I'm going to look for a resistance area. First of all, I explained that a resistance area is where your sell candle starts from, this place here. So if you go on a lower time frame, you can easily be able to see a clearer vision of your resistance area. From here down to wherever the sell candle stops. This place here is a resistance area, and then where the sell candle stops, and your buy candle, which is the green candle, starts, is your support area. So it's more like you're not flipping the chart, right? So you are saying where the buy candle stops and where the sell candle begins is your resistance area. And where your sell candle stops and where your sell candle and your buy candle begins is your support area. That was where I marked. So for instance, this is a resistance area here. And then let me just mark this place down. And this is a support area. So this is a support area, this is a resistance area. So now we're looking for possible buy movement, possible buy entries and co. And normally we, like I said earlier, market is a movement. So we literally just be looking for possible places that market can literally give us good areas. If market doesn't give us good areas, we can't take any trade at all. So we are looking for an area where market turned resistance turn support. The market gives us our resistance turn support areas. Even if you are going to be marking it, we are looking for resistance turn support areas, resistance turn support areas, and then we can say from here like this, a resistance area. This is a resistance here. There is a resistance turn support. You can take your trade and you're out of the market. I don't know if I'm going to be confusing you people, but I just want you guys to just understand what a resistance support on support area means and what a support on resistance area means. I already explained in the first other session we were having the resistance to support area and your support the support on resistance area. And now I'm showing you a support on resistance area. Another a resistance on support, sorry, a resistance on support area for your buys. The same thing here, resistance on support area for your buys. And the reason is because that is how it's meant to be. So in your uptrend, we're looking for resistance on support. In your downtrend, we're looking for support on resistance. We're looking for support on resistance. So that is it. You don't need to start trading this strategy or anything I just taught you now. It's just for you to have a clearer understanding of what the market is all about and what makes up the trend. And for you to understand that in a up or down trend, this is what we look for. I also said that in a ranging market, you do not trade a ranging market. Only those, some people know how to trade a ranging market because they understand the market is a movement and they know how to trade it. But you as a beginner, avoid a ranging or choppy markets. I explained that earlier, which I'll do another video, record and send to the group so you people can be able to understand it better. So that's all for today. If you have questions, please drop it in the group. I'll answer. I hope I did not confuse you. We are still going to touch this topic all over again, but this is just a beginner phase and little touches areas. Our next class is on Wednesday. I'm going to be explaining time frames and all of the things you need to know about time frames and how they work, with how to analyze the market from your monthly, weekly, daily, and downwards. I only explain the trends from understanding what your market trend is from your monthly, weekly, daily to your 4 hours. But I need to also break down the time frames and sections for you to take trades, and then the most important areas of those sections that are really key to your trading, and you can find what works for you. I'll be explaining that by next week, Wednesday. Please, if you have any questions, please drop it. You can ask now. You can start to drop it on the group. I hope I did not confuse you, but I was able to convince you that forex trading is not hard as they glorify it to be, and it's not a scam.